My name is Ethan Venneklassen, and I'm the Head of Advocacy and Communications here at ID 2020. Let me begin today by saying good morning, good afternoon, or good evening, wherever you are, and welcome to this third installment of the ID 2020 Summit Sessions webinar series. When we kicked off this series, we knew we had a fantastic lineup of speakers for you. We started with an open and honest discussion about what it's going to take to achieve ID 2020's vision of good ID for all. Then we dug into one of the hottest and most complex topics in digital identity today, digital vaccination certificates. Today, we're going to review the tremendous progress that has already been made in expanding access to financial services and discuss the barriers that remain for more than 1.5 billion people globally. We know that not having a widely accepted form of ID makes things that most of us take for granted, such as getting a loan, starting a small business, or securing a title to land, difficult at best and, frankly, in many cases, impossible. Today, we're incredibly privileged to have with us some of the leading experts in the field of technology and financial inclusion to discuss the role that digital ID can play in reaching the last 30%. I'd like to thank all of our panelists for taking the time out of their busy schedules to be with us. While the pandemic has made it impossible for us to come together in person, we're delighted to offer this series as part of ID 20's ongoing effort to keep our community connected, foster collaboration, and continue to learn from one another. And before I turn things over to Meredith, I'm also excited to announce our last two sessions. On November 12th, we have a session entitled Laying the Foundation, Digital ID for the Next Generation. And then on November 19th, Congressman Bill Foster of Illinois will be our closing keynote speaker. Congressman Foster is a member of the House Committee on Science and Technology and the House Select Committee on Coronavirus. He's also the author of the Improving Digital Identity Act of 2020 and, little known fact, the only PhD physicist in Congress. Should be a great session. As always, I'd like to thank our partners at Biometric Update for the support of these sessions. And I'm not exaggerating when I say that we've been absolutely overwhelmed by the positive feedback that we've received after the first two sessions. So to our esteemed panelists, no pressure or anything. We'd like to invite all attendees to post their questions in the Q&A box, and towards the end of the session, we'll get to as many of those as time permits. With that, it's my privilege to introduce my colleague and your moderator for today's session, ID 2020's Head of Public Sector Partnerships, Meredith Kravitz.
Thank you, Ethan. I am thoroughly excited for today's session and look forward to hearing from our incredible panel of speakers. I would be remiss if I didn't begin my comments today by noting the extent to which COVID-19 has accelerated the digitization of financial services and the extent to which digital identity as a critical building block of the digital financial economy has been increasingly recognized as a prime driver for financial inclusion. Being able to prove one's identity is a prerequisite to a life of dignity, access, and opportunity. At ID 2020, we have always been passionate about digital identity as a key enabler for access to rights, services, the economy, and participation in a modern society. And while, as Ethan mentioned, over 1 billion people have been brought into the financial system over the past decade, there are still well over 1 billion left behind. In fact, of the 1.7 billion or so unbanked or underbanked individuals globally, the World Bank has estimated that approximately 375 million remain financially excluded specifically, though perhaps not exclusively, because they do not have the legal identity documentation to meet KYC requirements. Other estimates put the number slightly lower at about 20% or 340 million, but nonetheless, there remains over 1 billion individuals globally who lack any form of recognized ID. ID 2020's manifesto is premised on the idea that everyone has the right to assert and prove who they are equally and without discrimination. This principle underpins all that we do. And in this increasingly digital world, we all deserve better forms of digital ID that are privacy protecting, user controlled, portable, and persistent throughout our lives. But we will not be able to get there without a firm commitment to serve the needs of society's most vulnerable and a sustained focus on the inclusion and empowerment of marginalized populations in the design and implementation of digital identity solutions. The failure to do so, we know, can only further exacerbate these existing inequalities. The question of financial access and opportunity is what our panel will be focusing on today. So let me take a moment to introduce them all. Greta Bull is the CEO of CGAP and a director at the World Bank Group. She has 18 years of experience in development finance, primarily focused on small and medium-sized enterprises, microfinance, and digital financial services. She has worked with both financial service providers and policymakers in Latin America, Central and Eastern Europe, Sub-Saharan Africa, and South Asia. Her clients have included banks, microfinance institutions, mobile network operators, and fintechs. Prior to joining CGAP, Greta was a manager for Financial Institutions Advisory Services at the IFC. Yiannis Theodorou is a senior director with GSMA's Mobile for Development Group. He leads the digital identity program as well as several policy and advocacy initiatives related to development and humanitarian practice. He is currently exploring the role of mobile and government policy in accelerating digital identity ecosystems to support the digital and financial inclusion of underserved populations, with a specific focus on women and refugees. Prior to joining the GSMA, Yiannis was a strategy associate at the UK regulator Ofcom, developing strategic and regulatory policy insights across the internet, TV, and telecom sectors. Ajay Bhalla is another one of our speakers today. He is the president of Cyber and Intelligence Solutions for Mastercard and serves on the company's management committee. He leads the team that develops product solutions to ensure the safety, security, and experience of Mastercard's products and solutions for consumers, merchants, partners, and governments around the world. Prior to joining Mastercard, Ajay held key leadership positions at HSBC and Xerox. And finally, but certainly not least, Rod Boothby is the global head of identity at Santander. Rod is responsible for rolling out new identity and access management systems. He also leads Santander's effort to create a broad standard for verifying identity while protecting privacy. Prior to joining Santander, Rod was the co-founder and CEO of NPM Inc., which was recently acquired by Microsoft and folded into the GitHub team. So now everyone's been introduced. Greta, I will turn it over to you for the first set of comments.
Okay, I'm just managing my different buttons here. And I now have little things dinging in the background, so let me shut my email down. So thanks a lot, Meredith and Ethan, for the invitation to speak today. I'll start just by briefly introducing CGAP, because not everybody on the phone may know who we are, and then maybe talk a little bit about how we see ID in the context of financial inclusion. So CGAP, for those of you who don't know us, is a think tank that is housed in the World Bank, and we are very focused on financial inclusion of the world's poor. And we think about that as, how we bring financial services and technology together to produce solutions that work for poor people. And we really like to think about this as going beyond access and usage, which has been the dominant paradigm in the financial inclusion space for a long time, and really start thinking about how financial services make people's lives better. How do we use them to help poor people grab opportunities and build resilience? And I think the resilience point is obviously pretty pertinent today. In terms of the role that ID plays, it's hugely important in the space that we work in, and basically foundational. We always like to think of, our financial inclusion community and the work that we've done on payments as being sort of an on-ramp to the rest of the financial sector, but actually ID is in a way an important on-ramp into the financial sector to begin with. And, it's really increasingly become a game changer in the space that we work in. So we're trying to go out and bring people into the system who literally had no bank account, often no documents, that for all intents and purposes, they just don't exist. They don't create lots of data trails, et cetera. And so if you can't identify yourself, it's pretty hard to get a bank account, not least because financial services providers are required to conduct customer due diligence for anti-money laundering and countering the financing of terrorism purposes. And not being able to prove who you are is a very significant barrier. So the data set that matters most for us in the financial inclusion community is the Findex, which the World Bank conducts every 3 years. The last Findex that was done was in 2017. And in that, they identified that lack of documentation was cited as the primary barrier for access to financial services by 26% of unbanked individuals in low-income countries. So it's a huge problem in terms of bringing people on board. So from the point of view of a customer trying to come into the financial system, if you don't have a way to identify yourself, it's really difficult. But if you also think about it from the perspective of a provider of those financial services, it's pretty expensive figuring out who is who and doing what you need to do to comply with those AML CFT rules. And so, you know, the customers that we're trying to bring into the system are marginalized. They don't have a lot of money. There's not a lot of money in the game, right? And if it costs you a lot of money to verify those people, you're just not going to go there, right? And what we've learned, I think, over the last few years that we've been investing in the ID space is that having a digital foundational ID in place can reduce the cost of onboarding and verification to providers. So, you know, the data point that we have is from the Indian Ministry of Finance that's obviously invested a ton, not only in ID, but also in infrastructure that helps aid financial inclusion, which is also very important in our space. But they estimated that that Aadhaar reduced the cost of verification of a customer from $15 to half a dollar, right? That starts making more economic sense if you want to bring people into the system. And it also does things like make remote onboarding possible, which has been so important during the COVID pandemic. In the last 6 months, governments have been scrambling to get help out to people. And I think countries that have that kind of infrastructure in place, like India, where they can identify, they can deduplicate, they can figure out who's eligible, they can get that money through their payment system that they also invested in and get it out into people's hands, it's really, really important. So ID is pretty fundamental, basically, to both make it possible for people to get into the formal financial system, and we still have 1.7 billion people who aren't part of the formal financial system, but also in terms of reducing the cost barriers that make it possible for many very highly motivated providers to come in and serve those clients affordably. So let me pause there.
Thank you, Greta. Yiannis, you're up next.
Thank you, Meredith and Ethan, and thank you for inviting me. It's a pleasure to be here tonight. So just also a quick intro on the GSMA for those of you who may not have heard of us. So GSMA is the Global Mobile Industry Association, and we represent about 800 mobile operators members. I lead the Digital ID program, which is primarily funded by the UK's Foreign, Commonwealth and Development Office. So I'd like to focus my intervention to sort of share 3 of our key insights and the work we've been doing on the role of mobile and identity in reaching the last mile when talking about financial inclusion. So in many countries, as I'm sure many of you know, mobile is the only means through which an individual can be both digitally and financially included. I'd like to quickly share my screen to show you a graphic which really illustrates how mobile money continues to reach the poorest, the most financially excluded. So just bear with me for a second. Assume you can see this. So yes, if you can see sort of the bottom left corner here shows the mobile money penetration is highest in the poorer countries with the largest unbanked populations. So all those big dark blue dots represent countries, and the size of the dot is proportional to the percentage of the unbanked population that uses mobile money. So just to give everyone a snapshot of how important mobile money has become, 2019 was a milestone year with the number of registered mobile money accounts surpassing the 1 billion mark. In sub-Saharan Africa alone, 50 million new accounts were opened. About 290 mobile money deployments are live in 95 countries. And for the first time ever, the percentage of all digital transaction values now exceeds the cash in and cash out values. In other words, more money is circulating than exiting the mobile money ecosystem. And we are talking about a volume of 22 billion USDs. The second insight I'd like to touch on is that the ability of an individual to be onboarded to digital financial services in their own name relies in their ability to access a SIM card in their own name, which itself relies on having an acceptable proof of identity. As Greta mentioned, it's required for KYC and mobile money, but also in 155 countries, SIM registration is mandatory. So people need an ID to buy a SIM card. And that's across the case in the developing world. Now, we mapped out the ID coverage in most of the developing countries against the mobile penetration in those countries. And as you can see here, it's evident that in almost all countries, the two lines are parallel, suggesting a strong direct correlation between access to ID and access to mobile in one's own name. We went further, actually, and we did a research across 31 countries and interviewed MNOs, mostly in developing countries in Africa, Latin America, and the Middle East. And 57% of mobile operators said that they experience fairly regularly lack of required ID as a barrier to onboarding customers to SIM cards and more money accounts. In fact, we estimated that across the 95 countries which offer mobile money services, just over 500 million adults lack a formal ID and are therefore unlikely to be able to meet KYC to access mobile money services, even if they live down the road from a mobile money agent. Now, the third and last insight I'd like to share today is the role or roles of mobile in digital transformation strategies. Now, as we all know, most developing countries, especially in Africa, are now looking to digitally transform their economies and to re-enroll their populations to digital ID ecosystems, many using biometrics, by the way. We have been exploring the various roles that MNOs could play to support this transformation and minimize the risks of exclusion. And there are two main trends around the roles that MNOs could play that we're seeing. And COVID-19 has certainly accelerated those trends. Now, on the left-hand side, as you can see on the slides, the first trend is a recognition that mobile operators could act as government partners to support enrollment into these new digital ID platforms because they've got an unparalleled nationwide reach and expertise in dealing with customer data. Nigeria is one example where this is happening as we speak. On the demand side, on the right, mobile operators can play a big role in remote customer identity verification, because once they've checked a customer's formal ID and linked it to a mobile subscription, it becomes easier to leverage those assets to then enable online ID authentication when accessing third-party services. And have been working with a number of our members to explore such innovations further, including the use cases you can see there on the right listed there. I can give a few examples later if there's time, but I think I'll conclude my intro here and offer some examples later if we can afford to. So thank you very much.
Thank you, Yiannis. Ajay, you're up next.
Meredith and Ethan, thank you for having me here. It's a pleasure to meet my fellow panelists as well. So at Mastercard, our first belief is that everyone has the right to a digital identity. And, Meredith, you started off with that in the current environment with, COVID happening globally, what was going to happen in the digital space in 5 to 6 years has suddenly got compressed and has happened in the last 6 to 8 months. And everything has pretty much gone digital. So I think the world is staring at an environment where everything is becoming predominantly digital. We are in the year 2020, supposedly, and you still have a situation where 1.7 billion people are globally unbanked. It's like, it's hard to believe. And, we talk about development, we talk about including everybody, and yet such large populations around the world are excluded. And with the current environment and the world becoming increasingly digital, I think we run a very big risk that we are creating a society of haves and have-nots more than, it was ever there in history. Because, we also know the statistic that almost half the world's population remains offline, do not have access to digital stuff. So you're looking at a world of the future where some people who are banked and have access to all the digital stuff will prosper, while the others will remain where they are and probably become poorer. So that actually is a pretty horrible situation to look at from a future perspective. And I think one of the situation the main reasons for this situation is because of lack of identity with many people. And you raised some estimates. There are various estimates around, but in our experience, when we research financial inclusion globally, one of the key reasons we find that people do not have identity. If they have identity, that's an identity which cannot be verified by financial institutions or other institutions, because of which they don't get access to financial instruments. And if we are able to solve this problem, I think we can enable access of financial services. They can then take a bank loan, they can buy stuff, they can register property or land if they buy in various parts of the world. So it can solve for a lot of problems. So we've been working in this space for some time now. Broadly, we believe that digital identity is a consumer's right. It's, as I said earlier, and that right which they have of their identity can be exercised in such a way that they can control the identity, they can control the data that they share, and they can control access to it. So in fact, a few months back, we actually released a Bill of Rights, so-called Principle of Digital Identity, where we laid out the fundamental principles we believe it should govern the whole framework of digital identity around the world. And we've been working with many organizations in this space because it's a complex space. No organization can do it alone. And, we have Microsoft working with us on it. We've got Samsung working on it with us. We've got a number of other financial institutions working on it with us. We've been doing various pilots globally. We've launched some full-fledged programs too. We've looked at various use cases. We've done it, for example, with Deakin University in Australia, where it's being used for education. We've been working with some telcos where it's being used for, identifying telco consumers. We've been looking at healthcare. We've been looking at it in the financial services space. And one of the most successful areas where we found is where we've integrated financial services with the social identity programs. So for example, in South Africa, and for example, in Kenya, we've been able to link payment cards with the identity programs which governments run. And that has enabled, farmers in Kenya to be able to get access to financial services. It has also enabled governments to be able to give subsidies to them, which in today's environment becomes a very big enabler. So I think my key big request to everybody who listens and who's on the panel is that we need to all work on it together to enable it. No one can do this alone. Thank you.
Thank you, Ajay. Over to you, Rod.
Thank you very much for the opportunity, Ethan, Meredith, my fellow panelists. It's really interesting to hear your perspectives. Ajay, I'm already working with Charlie Walton on your team. Absolutely fantastic crew. And we've been doing a great deal with them and with the International Institute of Finance to try and develop solutions around digital trust. We know who our customers are often in ways that we can't necessarily digitally onboard them, but we can do it through our branch network. We can accept types of identity that are in the Financial Action Task Force, or FATF terms, are still official identity, but they are more local. They are simply a birth certificate, for example, which is often hard for us to accept when you're just scanning it on the phone. We can also connect this with powerful capabilities from a bank's perspective to then leverage that small token, that small piece of knowing who someone is, into a much more powerful set of assertions. We can scan their face, their fingerprints, their voice, understand a lot about who they are online, and so help them to prove their identity. Most importantly, we can help them to participate in a digital market that is global by turning identity into trust. We know this customer. We've known them for years. They are in good standing with the bank. And so if they are somebody who is, I don't know, making blankets in Peru and supplying people in London, we can make the assertion that this is a good business partner to work with. We can back them up. And by doing that, we can actually tremendously help them from an economic point of view. But to achieve it means achieving standards. So we've been working with OpenID on a new digital trust standard. We've been working with the IAF. We've been working with partners like Mastercard to come up with these standards. And I think that is the key, that we have to come up with good and decent standards in order to be able to help deliver this globally.
Thank you so much, Rod. So as we jump into the discussion, I want to invite all of our panelists to feel free to ask follow-up questions. It is my hope that we can make this a discussion. I'd also like to remind everyone who is attending to please post their questions in the Q&A box. I will ask questions to specific panelists. However, all panelists are welcome to answer. Greta, I'll start with you. You noted how customer due diligence, or CDD, can be expensive, and indeed in some circumstances it can even prove unprofitable for providers. On the other side, unduly lengthy and onerous requirements for the customers themselves can prevent full inclusion. One of the things that's necessary here are supportive ID structures. And so you mentioned Aadhaar as an example, but for countries without these strong national ID systems, or for groups like migrants or refugees who are more likely to lack officially recognized ID, what are the workarounds here? Are there any? What is the best way forward under those circumstances?
Yeah, that's an incredibly complicated question, but I'll see if I can touch on a few workarounds. Obviously, having a good ID system makes a big difference, right? So we see in countries like India and in Peru, it's a lot easier to onboard people, and we have good financial inclusion. But if you look at how the mobile network operators started the process of bringing people into their mobile wallet system, there was a lot of work to be done that was about lowering the standards while still complying with what FATF requires. So, just having caps on the balance that could be held on an account, by minimizing the amount of money that could be sent during a day. So there were ways that the load was lightened a little bit for providers who were making those mobile wallets available. And that was kind of the key insight of M-Pesa, right? Like it was about having distribution points, cash in, cash out points close to the client, being able to do that sort of lower tech identification for people who don't have birth certificates more often than not, right? And finding ways to kind of make that work better. I think we've learned a lot from that. I think, again, COVID's put a lot of pressure on us, right? So there's been a lot of work to say, okay, if we're trying to make social payments to people, how do we make that easier? And we've seen a lot of countries going, okay, we're going to lift that requirement. We're going to make that a little bit easier. And that's really helped governments to get money out to people. But, I think one of the things we do need to take a long, hard look at is, our financial system's built for people who have a lot of money, right? And the whole kind of FATF system's important for anti-money laundering and countering the financing of terrorism, but it catches a tiny percent of actual illicit transactions, right? I mean, some estimates are that it catches less than 1%. So we're excluding massive numbers of people for not having, the proper credentials to get into the system for the benefit of not catching most of what is flowing through the system. So I do think it is worth thinking about how you build those simplified accounts that are able to onboard people. And look, I come from 2 countries that don't have an ID. I'm American, but I'm also a British citizen. Neither of those countries has a foundational ID, but they are data-rich ecosystems. And so you can figure out who somebody is because they do exist. And I do have a birth certificate, but there are lots of different ways to do this, but when you have people who have feature phones who don't show up digitally, their data is not flowing through the system, they just don't exist. And so we have to find ways to make that easier, or else providers just have no incentive to go out and serve those people.
Thank you, Greta. Would anyone else like to take a stab at that question or follow up?
So I can add to what Greta said. I think she's spot on that it sounds like an easy topic, but it's very complex in terms of execution. And that's why it needs a lot of organizations to work together. And as we work, so, you can look at national ID systems, which very few countries have. And in many countries, consumers don't even like them. Like they don't want it, they don't want their names to be in national ID databases. I always wonder why not, but that's their opinion. So that's one big issue. I think the second big thing that you look at is countries where at least you can have good data sets. So driving licenses, for example, most countries have. So you can rely on that. There are some other business information available in terms of data sets in many countries through bureaus, which you can add that. Then, of course, you look at biometrics. Again, that's again a relatively very new thing available in very few countries. And then lastly, you've got the new stuff which is coming in, which is your digital footprint. Now, you have two ways to get it. You can get it out of a mobile phone database, or in the future world, you can get it from devices which consumers will own, because they'll all connect to internet, they'll all do transactions. Of course, we are all assuming in this conversation that these are people who have access to digital, right? And I am hopeful that the price of mobile phones, feature-rich phones, is going down significantly, and the price of accessing mobile connections is going down. So I think the pool of consumers who can access and give us this rich data of at least transaction behaviors or device behaviors or something like a driving license will increase. So over the next 5 years, I think we can see a huge development of being able to identify people and then give them access to financial services.
Thank you, Ajay. I'm going to sort of follow up on that somewhat. You've spoken several times about how these complex questions require organizations to work together. That is the premise of ID 2020. ID 2020 and our partners subscribe to the values and principles that you described. But there are other parts of the tech sector that see data as a commodity. And in fact, it underlies their entire business model. So how do you see this conflict coming to a head over the next few years in the policy arena? Again, a question for Ajay to begin with and open to everyone afterwards.
So I think, like you rightly pointed out, I think there are various business models, and it's not only the tech sector. I think data itself, has all kinds of governance around it, and it differs from country to country. It differs from organization to organization, and I think that entire space is changing very, very fast, as we see in the news every day. So I think a lot will evolve over time. I think organizations like ID 2020 can play a major role, and that's why we joined ID 2020 in bringing consensus around this topic, in bringing people like all of us today to discuss this and saying, hey, this is a need for society, because ultimately the idea is to create a prosperous society. If we create a divisive society where only few people have access to few things, and education and bank accounts and loans and right to property, then you're going to create a problem for everyone. And what may look like a prosperous part of society will also have problems, because the whole society will then have problems. And I think that's where organizations like yours can play a major role in bringing this opinion together, in bringing this consensus together, and like one of our other panelists raised, and actually finally moving to creating some standards. And if all of us collaborate and say, okay, these are the 10 standards we want, this is how we will identify an individual, I think the whole system can start working together.
Meredith, could I come in on that one?
Absolutely.
Yeah, I think it's a really interesting question, and I think it speaks to something Ajay said earlier, which is, in some places people are really reluctant to have an ID. Well, I think that has a lot to do, there are lots of reasons, but it has a lot to do with privacy, right? And the concern, and we've seen this manifested in India, in fact, well, okay, you've got all the information on me, including my biometrics, sitting there in a giant honeypot, and what's going to happen if that gets hacked or if it's misused? So I think there's a huge aspect of data to this whole conversation. And so I don't think we can talk about the importance of ID without talking about the importance of how that data and how that information gets protected. And I think this is something that we don't talk about enough. We've done a lot of work on this actually at CGAP. And one of the pieces of work we did was with financial sector customers in both India and Kenya. And we did some tests with those customers, and we found that poor people are willing to pay for privacy that's built into the products that they are willing to pay time, and they are willing to pay money for that privacy. It is something that really concerns people, right? So I think there is a really important aspect of all of this, to Ajay's point about collaboration and building public goods. You know, again, if you look at India, not only the ID, but UPI, there's a lot of public good infrastructure that's being built in that country that private sector players can build on and leverage their businesses off of. And that's incredibly valuable. But the flip side of that is we do need to think really careful in a digital world about how that data flows, who controls that data, and how protected that data is. And there's also, you know, really interesting work going on all around the world right now to empower consumers with their own data. And I think that is going to be a very interesting frontier to explore. But again, to Ajay's point, it does require some collaborative models, some public goods, but pretty robust protections. And those are missing in a lot of places.
Greta, you gave me...
Ajay, please go ahead. If I can just add to what Greta said, and I think that was a very important point you raised, is that when we are talking about digital identity, we are stressing the fact that we don't want to create honeypots of data, and that their data should actually reside on the consumer device. And that's why only consumer should actually have access to the data, who they share with, who controls it. And, you know, that's a very, very important point, because if we don't address that, this whole thing is not going to take off.
Thank you, Ajay. That actually still gives me a great launching pad. And Yiannis, I'll throw this to you. You know, all of what you just said sort of requires a certain level of digital and financial literacy in order to bridge this gap. So my question to you, Yiannis, from your experience, particularly with mobile money services, what are the risks of opening up financial systems and products for the most vulnerable without adequate accompanying financial education? And where do you see digital and financial literacy playing into this need for user centricity and user control?
Thanks for that. I think I'll take a step back and sort of try to respond to the previous question, and then that will sort of lead me to answering this one. But
Great.
We have done sort of quite a lot of research to sort of also back up and reinforce what Greta spoke about around the reasons why people don't have IDs or don't even want to get IDs. And you know, one big one is obviously trust and lack of trust, especially in regimes where there are either no privacy or data protection frameworks, or in autocratic regimes where the government is known to knock on the door of the private sector to ask for data and, you know, transactional and so on. And obviously that causes, you know, or leads to mistrust and unwillingness to sign up to an ID. Another big sort of bucket is cultural issues, especially in patriarchal societies where women may see less value or is traditionally not regarded as sort of someone who in the household where they would sort of link an ID to a service, because the man or the husband tends to do that. And again, that's a big factor in many societies. And obviously affordability and digital skills is the other big bucket, which I think you just asked about. We have a number of our members, particularly in the developing countries, where they either develop services specifically for those less literate to educate them on the benefits of using mobile phone services, and there are sort of educational campaigns or free apps and free sort of courses that they invite the most underserved customers to be part of. And in many countries, the MNOs, mobile operators, are working closely with governments and various public service bodies to tackle education and affordability, where obviously there's sort of some kind of public good to be addressed. But yes, I think I would just sort of conclude with the main one, which, as Greta said, is privacy and trust. And to your initial point around data being thought as the new oil, if I were to paraphrase. I think on the contrary, companies now are increasingly seeing the flip side of misusing data without consent and so on, and reputational issues lead to either huge fines or loss of trust with the customers, and therefore losing customers and sort of churn. I hope that sort of addresses some of the questions.
Yeah, thanks. Would anyone else like to jump in about digital and financial literacy?
I mean, maybe just briefly to build quickly on what Yiannis said. I mean, this is really important, right? Making sure that we're bringing all these people not only into the formal financial system, but into this digital ecosystem that's moving very, very quickly. And I think, you know, most people have shown that they're pretty good at onboarding. But you can see some of the hazards just in our own social media space, right? Of people kind of not being well equipped to, I don't even know how to talk about this, but not being well equipped to tell truth from fiction, maybe is the best way to put it. So, you know, there are hazards, and I think there is a role for educating people and getting people on board, but I think, you know, it's a shared responsibility. We always like to think about it, at least in the consumer protection space, of, you know, part of it's the responsibility of consumers, and we need to figure out how to inform consumers, but we're big advocates of privacy by design. When you're designing a financial product, when you're designing a public infrastructure that takes people's very sensitive data, you need to be building that in right from the start. And I think one of the challenges of the digital age is we've now seen this kind of explosion in different kinds of providers who are basing their business models on data. There's data out there all over the place, right? And so the privacy genie's been let out of the bottle. And now we have to sort of think about managing and coming up with rules and standards that allow us to manage people's personal data, because we're giving a lot of it away.
So I can add to this, Meredith, and I think you raised a very important question, because, you know, as you open the whole digital system to people, you also bring the risks of the digital system. And, you know, cyber attacks and fraud and breaches and hacking is part of that entire, you know, entry into the system. So one of the areas where we focused on is consumer education. So as we do all the financial inclusion activities, we've been very, very focused on making sure that we have consumer education in place, and we also have tools in place and solutions in place which can assist consumers. And we've tried to automate, you know, as much as possible. So it's in such a way that when onboarding happens, consumers can be educated, you know, about the risks of these tools.
Thank you, Ajay. I should note that it may have looked like Rod has dropped off. We knew this might be a possibility. He's in California, where he's experiencing some fire-related public safety power outages. So we're hoping we can get him back before the end of the session. Before I move to audience questions, I have one more for the panel, and I'm not going to you know, specify the speaker. I think you can all speak to this. You know, when we talk about financial inclusion, our focus tends to be on developing economies. But there are communities in North America, in Europe, and in other advanced economies that lack access to financial services as well. And I read a study from a few years ago that found 7.5% of households in the United States are unbanked. And these are particularly low income and poorly educated households. Are there parallels or lessons learned from your work in developing economies that can be translated into the US or European contexts? And where do you see the most, you know, the most opportunity for sort of growth worldwide in that regard?
This is a very, very big question, and probably way beyond the boundaries of what you want to talk about. So there has been a quite robust conversation emerging over recent years. This was started by the Treasury Department in the Obama administration, a dialogue between the international financial inclusion community and the domestic financial inclusion community, and there are a lot of parallels. I don't think you can sort of pick out one reason why exclusion might exist in each place. There are different reasons. We're talking about very different contexts, very different income levels, very different sort of financial infrastructures in those markets. I think the one thing that we probably see in common in a lot of places is that, you know, not everybody sees that they get value out of the financial sector. I used to have, I still have a bank account in South Africa, and I can tell you that the money shrinks every month, you know, even if I don't do anything, right? I get charged for putting my money in the bank. That happens to low income people a lot, right? And so I think there is something about finding ways to deliver services that are meaningful to low income people where they get value out of it and they don't feel like they're getting taken advantage of by the system is super important in both contexts. I think the economics are a little harder to make work in emerging markets when people are earning, you know, $2 a day. But there's some common threads that run through it, and that speaks to sort of the consumer protection, the financial education pieces of it. I think often people just don't see value in having that account. And I think that's on us as an industry. And I think, you know, the GSMA and its members have done some good work on onboarding people into that system. And I know Mastercard's been really thinking hard about how they reach low-income customers with their products. But, you know, there's still a lot more for us to do. People have to see value in these services to use them.
Thanks, Greta. Anyone else?
I can only echo what Greta said, and again, our research sort of showed the same sort of trends in that people who don't see value, even if they could afford to either get an ID and sort of link it and access a service, whether financial or otherwise, and unless and until they see that value and the return or impact on their livelihoods, they are unlikely to go the extra mile. You know, we have seen that where, again, in the more money context, where let's say additional services, access to credit, access to microinsurance, access to sort of the ability to pay your utility bills or electricity through your phone, unless and until those services sort of were offered, the masses wouldn't go out and sort of adopt the services and sort of sign up to them. So, and we've got tons of examples where mobile operators in developing countries have developed value-adding services to drive demand and uptake of the basic product.
So in all our research, we found really three reasons. I think the first one is the hurdles to entry, which is we discussed before the issue that people don't have identity, or if they have, it's hard to prove, they have to get it certified, and most people just give up and say it's just too hard. So I think that's the first big hurdle the system has to help them cross. I think the second big issue is education. And when I say education, this is not about the risks of entry into the digital system. It is about understanding the value of getting into the financial system. And, you know, helping them dream their future is something which the system needs to do. They need to understand that if they open a bank account, it is not about, just putting a few dollars in the bank account. It gives them access to financial services. It can give them in future loans. It can help them finance property. And I think that's a dream many of them don't have, and so they don't tap. And I think if the system can help with that education, that we've seen, helps that. And I think the third piece is to what Greta earlier pointed out, which is the economics and value. A lot of them have this fear that they'll put money and, it'll reduce because they'll be charged fees, and they just don't want to get into the system because of that. And I think if we can, again, create a value proposition which is very clear, documented, and explained to consumers, I think, again, that will make a big difference.
Well, and just to add, at the end of the day, there is a substitute that is free because it's subsidized by governments, and that substitute is cash, right? And so the enemy isn't each other, it's cash if you want to bring people into the digital ecosystem, and they have to see some value of moving out of cash and into formal.
Thanks, Greta. So before I know I said I was going to go to the audience Q&A, I have one more question, and I think this relates to sort of the digitization of cash transfers, and also back to my sort of first comment at how COVID is sort of accelerating the pace of this. Many countries are working to expand social assistance by providing digital cash transfers, but we know that women are at higher risk of exclusion from these scaled up cash transfer programs. And they're also being disproportionately impacted by COVID-19. And so I would just like to pose this to the panel, whoever would like to respond. Can you delve into the reasons for this and what the potential solutions are?
Okay, I'll jump in. Yeah, there are lots of reasons. I mean, pre-COVID, there were problems, right? I mean, you have legal frameworks that are just barriers. I mean, I did some work in the DRC for a while. A woman's not actually allowed to own a business in her own name or a bank account in her own name in the DRC. And that's true in a number of other countries, right? So you have to go through your husband to do anything. Women don't have access to mobile phones. So there are just lots of barriers that are sort of both legal and social norms kinds of barriers. It's just, and it's cultural in a lot of places, right? And so in some places, women can't get out of the house. The interesting thing is that sort of the digital economy is kind of bringing in interesting opportunities, right? So we're seeing the emergence of things like gig platforms that women are using. We're seeing things like social commerce, so not formal e-commerce, but Facebook commerce, where people are sort of putting up shop fronts and able to sort of operate that way. So we are seeing workarounds. The interesting question is that keeping women in the home more, or is that getting them out, right? There is a lot of evidence that directing social payments at women has a disproportionate impact. And so I know in a lot of the work that the World Bank is doing, and I think the World Bank is very possibly the largest funder and deliverer of social payments programs around the world. They're working with close to 200 governments on this right now. Baking in, including women and targeting those payments at women is a huge priority for them because it does trickle through and result in benefits to households. But COVID has been disproportionately difficult for women. And so I think we're going to have to sort of come back towards all the progress that we've made previously. There's still a 9% gender gap, right, in access to financial accounts in developing countries. And so we still have a lot of work to do. And that, if we could tackle that in a few big countries, that would make a big difference.
Just to add to that, yes, in many countries that we've studied, the government policies around social inclusion and changing the protection payments and targeting them at women has definitely had an impact. Pakistan is probably a very good example where the women head of household was targeted, and that sort of led to a huge increase in women being included. On the private sector side and efforts that they are doing, I can name quite a few mobile operators in Africa who hired a lot of women mobile money agents and basically tasked them with onboarding other women, and that had a huge impact again in onboarding women to more money because they felt more relaxed talking to a woman agent, more trusting and so on, and that had a huge effect on both education and sort of financial inclusion levels. And I think probably the other link point is when it comes to overcoming those cultural norms that also Greta alluded to. I think educating or pushing for changes in policies overall that have a gender-specific element helps overcoming those patriarchal or gender-biased trends. Besides ID, but if you have, I think the idea is if you have policies that are specifically, addressing or catering for women, then you're more likely to see more women becoming, entering the formal economy and sort of becoming financially included.
So Meredith, I think it's a very unfortunate situation that because of COVID, women are getting disproportionately impacted. And it's a variety of reasons. It's different reasons in different countries. But the society needs to do a lot more for women because it'll be terrible that with great difficulty we are making progress on gender balance. And, like Greta said earlier, it's still far behind. It's still not where the world should be. And it'll be really unfortunate that because of COVID, we go further behind. So I think as a society, we need to do a lot more. We've been very focused that, all the programs that we do on financial inclusion, on identity, we've been very, very focused that women are included. We in fact go out of the way to make sure that women clearly benefit from the programs that we are launching. But again, we need to all do it together. No one organization can win alone in this space. And programs like identities, programs like financial inclusion can actually help a lot, because if a subsidy goes in that woman's bank account, I think that counts for a lot. That the same applies for education. And again, we've been very focused on programs for education in women too, because you educate them, you bring them into workforce, you get them to get an identity, then you get them to open a bank account, and you give independence to them. And I think that's what we need to do as a society.
Thank you, Ajay. We have time for one more question, so I'm going to move to an audience question. It's far more wide angle than our previous questions, and so we have a few minutes to answer a fairly broad question, and I apologize we don't have more time. From the audience, beyond statements of digital rights, are people also compiling statements of digital duties? Can institutions be called upon to create shared duties that will then give rise to rights that can be enjoyed? And sort of a follow-up for that was, what kind of laws or regulations would you be open to that would enshrine some of these rights in law and carry accompanying penalties? So any combination or any piece of that you'd like to tackle, please do. We'll go around. So Yiannis, I'll go to you first.
Well, that's a big question. I think again, with the mobile hat on, I think the digital right that I can sort of perhaps advocate for is the ability to communicate and use your phone without fearing that your communications will be intercepted or your money history being used to be targeted or categorized by governments or other private sector institutions. So and then linked to the identity story, again, being able to control your own data and decide who to share what and with who is key. So any efforts towards moving towards that direction would be a plus in my view.
Thank you, Yiannis. Greta, final word.
Yeah, well, I mean, I think there's a lot of work to be done on this, right? And it like I said before, it's going to involve consumers, the private sector, and the public sector in trying to solve some of these knotty issues around data and identity and all of this. I do think there are interesting lessons to be learned, not least from the card industry that's been in the collaborative space basically for 50, 60 years, right? The card industry brought banks together to create payments that would flow in an interoperable fashion across a network of different issuers and acquirers of merchants and customers, right? And over a number of years, they learned how to do that better and better. They have really good systems for fraud management. They have really good cyber systems. They have really good data mining systems. And, they've learned how to do this. They've also come under regulatory pressure, right? So they've been pressured on, opening up, on making sure that their pricing is fair and transparent, which is complicated in their business model, right? But it's evolved over time to be the way that it is, and the space has got a lot bigger. We've got a lot more providers in it, but I think there are lessons about rules, standards, and balanced playing field among competitors in a collaborative fashion that are worth looking at.
Thank you, Greta. And Ajay, final word goes to you.
So I think it finally boils down to creating trust in the system. I think for any system to work, you really need trust. And that trust is not easily created because it means you give people rights, but you also give them responsibility. But in the future world, if you visualize the future digital world where everyone can have a digital identity, and the digital identity can be on their device and they can control it and they can own the data and they can share it with whom they want, I think that model creates a system of trust. And if society evolves to that model where consumers actually can trust and have the ownership of the data on their own devices, I think we may evolve to a system which may create a prosperous society for the future.
Thank you so much indeed, trust being the backbone of everything. I want to thank our panelists for joining us today. I would also like to thank all of you for taking the time out of your day to participate and for your thoughtful questions. As Ethan noted at the outset, these webinars are part of ID 2020's ongoing commitment to foster collaboration toward a future for good ID for all. I'd like to thank everyone for taking time from their busy schedules. We look forward to seeing you in session 4 2 weeks from today.